One of the things that regular asymmetric investing viewers are going to hear me talk about over and over again is who are the companies, what are the apps that customers are choosing to interact with on a regular basis? That's how you know you have a lot of power in the market and you have power over demand. That is really the key for investing in a digital and an internet age. In the 80s and 90s, it was fine to be the supplier of choice. You had power over distribution. You had advertising power. But the business world completely changed when we went to a digital world where I can find any product, any service that I want anywhere in the world with a moment's notice, even with the device that's in my pocket. And one of the businesses that has not yet been disrupted is housing. But we are on the way to that being disrupted. And what's the company that's going to benefit the most? Who are buyers and sellers and even real estate agents interacting with the most in the housing market? The answer is simple and it's staring us in the face. It's Zillow. That is the company that could be the dominant player in the multi-trillion-dollar housing market in the future. I think this is the biggest no-brainer play for investors over the next couple of decades. And an interesting lawsuit that came out recently shows just how much power they have in the market. Let's dig into that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. If you want more from me, check out my newsletter, Asymmetric Investing. There's a link on the screen and a link in the show notes. Lots of great content there, including my asymmetric portfolio, which has done very well versus the market. And I also want to thank this video sponsor, Fiscal AI. I'm going to use Fiscal AI throughout this video. And this is really the first research tool that I use for everything. It not only has all the market information, the fundamentals, the financials, everything you need to know, transcripts, insider buys. It's got these great KPIs or key performance indicators. I'm going to show this with Zillow. If you want to know how much revenue they're generating from mortgages or from the rental business, that's really what I'm keeping an eye on, not necessarily just their overall top line numbers, but what are those two segments doing? That's what's going to tell you that they're expanding into more markets, more eyeballs come into that app. If you're interested in doing your own research, go to fiscal.ai/ASYM. You can check that out for free. They're pro tools for 2 weeks. And if you like what you see, you can get 15% off. This is a product that I pay for. So putting my money where my mouth is, fiscal.ai/ASYM. Now with Zillow, I think first we need to understand the vision for the company for the future and how this fits into what I call the smiling curve. The smiling curve is really a concept that explains a lot of businesses on the internet. You're either the company that has scale, where there's a reinforcing loop of users and revenue that allows you to make your product better, that attracts more users and revenue, or you're a niche player. You're a small company building on top of other platforms. You're me as a content producer building on top of YouTube. I'm never going to be the size of YouTube, but I'm able to leverage YouTube to reach people who are interested in my content. That's an example of the two ends of the smiling curve. In the housing market, there's really no company today that lives on the right side of the smiling curve, that has the scale that nobody else can match, the go-to app. The closest thing that we have right now is Zillow. And I think we are at the point where they're starting to build that reinforcing loop. And their vision for this is what they call the housing super app. So this is the buying side of their vision. They want to have all of the mover tools. So your ability to shop for a mortgage, schedule a tour, find an agent, have messaging, get pre-approvals, and then even get all the way through title search and closing, all that kind of stuff. And then same thing for agents. All of these tools are what Zillow is building for the buying side of the business. Now, the interesting thing here is that a lot of these tools are not necessarily things that are unique. There are local or regional companies that have a lot of the same capabilities. But Zillow is really the only company that has the scale to reach this on a national scale. So for example, I looked at a home recently and we were looking for information on the house. When was the lot sold? What was it sold for? To just get an idea of what sort of improvements were put into the house. The realtor went on their specific app, their niche app. I went on Zillow and I found the information that I needed faster. And she said, that happens a lot. They have more information on Zillow than I often have with our own proprietary tools. So this is what you see on the internet on a regular basis. There are dozens and dozens of streaming services, but Netflix is the winner because they have the most content and the best content, which attracts more subscribers, which gives them the economics to buy the next piece of content. That's what we're seeing with Zillow. You need to have two sides of the market. You need to have supply and you need to have demand. And when you have both of them choosing Zillow, that's how you win in the market. But what's unique with Zillow is that they've now moved into rentals as well. This is their ComScore average for monthly unique users, and this is the rentals side of the business. So this is Zillow Rentals versus Apartments.com. Apartments.com is in decline. This is a CoStar business. CoStar also owns Homes.com. Sounds like they are rethinking how much they want to invest in that business. That was supposed to be a competitor to Zillow. So Zillow is basically taking market share in both rentals and homes. What does this look like in the numbers? These are the KPIs that I was talking about on Fiscal AI. Let's put these on a different scale here so that we can see in green, you have the residential business. This is the biggest business for Zillow overall. But then in blue, we have the mortgage segment. Mortgages is something they've been trying to get into for a while, haven't quite figured it out. Until recently, they basically just started to be an originator. Hey, we're not going to provide mortgages for you, but we will connect you with the mortgage and we'll just take a fee for that. So you can see that this decline, this is trailing 12-month numbers. This declined until kind of middle of 2023, but now it's been on a steady growth tear. $92 million, September 2023, trailing 12 months, March 2025, $155 million in trailing revenue. But look at the growth in the rentals business, and I'll just isolate that. You can see that this has been a steady growth business, 29% compound annual growth rate. So if we're at the point where customers are going to Zillow to look for rentals, and then they're used to going to Zillow and they can go to Zillow to find mortgages, to search for homes. It's the place that you just go peruse and look at what the valuations for homes in a neighborhood you might look like. That's how you win in this market. That is what Zillow is doing. And the company is not valued as if it is dominating a business that is a multi-trillion-dollar market, $17.4 billion market cap. That's because Zillow, not a ton of revenue and not a ton of profitability right now. You can see that there's just $2.3 billion in revenue over the trailing 12 months. If we add in net income, they've actually lost $81 million. That includes stock-based compensation. That's a concern for Zillow. They have a lot of stock-based compensation, but they do have positive free cash flow, and they have actually been buying back shares with some of that cash flow. Now, here's the wild part that shows just how concerned real estate companies are about Zillow's power in the market. Remember, Zillow is trying to aggregate demand, pull demand together, and then serve up supply to that demand. They're a marketplace company. But Compass is suing Zillow on the grounds that it is demonstrating monopolistic behavior because of listing standards where Zillow says you can't list a home on Zillow if it's listed somewhere else more than 24 hours in advance. Basically, Zillow is saying all homes should be listed publicly basically everywhere. That includes Zillow. What the real estate company is saying, you know what? We want to be able to list our homes where we want, when we want. So the question is, does Zillow have a duty to deal with every single listing that somebody wants to put on their platform, or can they put rules around that? Unless Zillow's a monopoly, Zillow does not have a duty to deal with every company. And I don't think we're at the point where Zillow is a monopoly. So this is interesting because it shows Zillow's power in the market. Zillow can make rules and companies have to follow them. Supply has to follow them because that's how they're going to get the best price for their customers. So look, this is a company where you need to look at the strategic positioning of Zillow's business, and then are the financials starting to support that strategic positioning and the decisions that management is making? I think with Zillow, the strategy is pretty clear. They want to be the go-to place for everything from rentals to housing, whether you're looking at a mortgage, whether you're looking at insurance, whether you want to close, whether you're a realtor, whether you don't want to use a realtor, everybody should be going to Zillow. That they want to be the app that everyone is choosing to interact with. I think they have won that business, and this will be a reinforcing loop for them for the next decade or two. The next thing to follow is the financials. So now we need to see this revenue growth. We're seeing it in the rentals business. We're seeing it in mortgages. Now, if the housing market starts to pick up a little bit over the next couple of years, we could see the housing business improve as well, and then that profitability will follow. Look, everybody, this is a massive, massive market. It is very possible that I'm wrong to be bullish on Zillow. But if I'm right, this is not a $17 billion business. This is a $100 billion business. It's a $500 billion business. This is a business that could be over $1 trillion in value. That is how important the housing market is just in the US. We're not even talking about international expansion yet. So I think there's a ton of opportunity for Zillow going forward. We're starting to see the flywheel start to take hold. And I think over the next few years, we're going to see those competitors start to fall by the wayside, just like we've seen in streaming, just like we've seen in video. The smiling curve works, and Zillow is winning this business. If you want more thoughts on Zillow specifically, check out the Asymmetric Investing newsletter. This is one of the stocks that I am most bullish on. I have bought it recently for the portfolio. Like I mentioned, that portfolio doing really well against the market, but you can check that out for yourself on Asymmetric Investing. And check out fiscal.ai/ASYM if you want to see these KPIs for yourselves and check out the numbers behind Zillow. Let me know what you think about this stock. Does it actually have a $1 trillion opportunity? Leave your comments in the comment section below. Thanks for watching, everybody. See you here next time.